traders and investors. Ben at Tyndall, tradinganalysis.com. Today is Thursday, March 25th, 2021, and this is your public weekly market update. Hey, if you're interested in staying up to date with myself and the rest of the trading analysis team, following us on Twitter is a great way to kind of stay up to date in between our public video updates. For instance, here's a chart I posted last week in the 10-year yield. We were looking at resistance up into 1.75. That's kind of where we anticipated a bit of a reversal to take place. And obviously the big question now becomes, is this simply transitory, such as Jay Powell suggests, or is this reopening of the economy going to lead to a more sustained and prolonged move, which will obviously continue to pressure growth and high multiple tech stocks? So definitely an area of focus for myself and the rest of the team. You can follow me at twitter.com/eWavePilot. So here's that chart. We were looking at 1.75 or 1.71 to 1.75 as a zone of resistance, anticipating a pullback to 1.42%. Taking a look at today, you'll notice that we did get up right into that 1.71 to 1.75 level. In fact, 1.75 was about the high. We're down to 1.61%, and I do anticipate this correction continuing. So what I want to do is I want to bring you up to speed with what I'm seeing and what I'm watching currently in the broader market indexes. So what we're tracking here is essentially a counter-trend corrective pullback. And regardless of where this counter-trend corrective pullback fits into the bigger picture, it should still present an entry opportunity, a buying opportunity, and a tradable low. So what I've got here for you guys is a chart of the S&P 500. We're looking at essentially the move from September of last year in through October as a three-wave correction. We see the move into February 16th as a completed five-wave advance. We had an ABC pretty much measured move pullback into the March 5th low, and then we once again rallied in an impulsive five-wave fashion. The S&P established a new high. The Nasdaq 100 has not done so. In fact, if we take a look at the Nasdaq 100, you'll notice here that we actually established our high on February 16th. Going back to the S&P, we established a new high here on March 17th. So what I see at work specifically for the Nasdaq, or for the S&P, excuse me, is a correction that could very well have just come to completion today. If you dive into the market internals, we did see some accumulation after finding support intraday. So let's get off the daily charts and let's take a look at the structure here and see if we can identify where this correction might come to completion. Off the daily and down to the 1 hour time frame, you'll notice that off of the March 16th high, which we actually set the intraday high on the 17th, we're viewing this as a three-wave move to the downside, a triangle completion in X, and another three-wave progression. This three-wave move has a confluence of fib support between 38.20 and 38.44. That also happens to line up with parallel trend channel support from the motive impulse originating off the October 30th low. I'm anticipating either one final move down into this zone, at which point I do feel we will resume the upside move, or alternatively, if I take you back to the daily chart, the move may have actually come to completion today in the form of yet again another measured move three-wave correction. Here, if I take you off of the daily, we'll drop our circle on the chart to give you guys some context. As we drop down to the 1 hour time frame, if we view this as opposed to a triangle in X, if we just view this as a combination of three-wave subdivisions, that gives us a secondary decline that was equal in terms of magnitude to the initial decline. It also represented about a 50% retracement. So if you can see a MotiveWave printed here and some sort of a corrective pullback, that will, in my opinion, begin to confirm the upside resumption in the markets. From the S&P, we'll visit the Nasdaq. In the Nasdaq, we haven't retraced obviously to new highs such as the S&P has, but we have seen a five-wave move. So if we don't get some sort of a secondary move lower, which still remains a strong possibility for tech and the Nasdaq, This is the count that I'm looking at. Down on the 1 hour time frame, as we were looking at in the S&P, you have a measured move 3-wave correction from February 16th through March 5th. From there, you get yet again 5 waves up, 1, 2, 3, triangle 4, up in 5. You have a 3-wave pullback, a 3 or 5 wave rally, another pullback, again 3-wave correction, demonstrating equality to the first corrective leg and taking you to about a 61% retracement. I think this could very well continue to resolve higher. If we do get the secondary move lower in the S&P, be watching continued downside support near the 78.6% retracement in the Nasdaq. And back over to the S&P 500, you'll notice that if we do start to see further downside and further selling, this is the area 3820 to 3844 that I'll be watching for completion. But as it stands now, I can't get behind the count that suggests the move off the high is MotiveWave's established trends. So therefore, I don't feel this move up in yields will present a very large and prolonged market correction. I could very well be wrong. Much of this is still yet to be determined. We are in a bit of a no man's land at this point. So we'll continue to track it, and we'll continue to bring you guys up to speed. You can visit us anytime at tradinganalysis.com. And for those of you who are interested in Elliott Wave and learning more about Elliott, if you're interested in Elliott, you need to have the right tools for the job. And one of the pieces of software that we use here at Trading Analysis is, of course, MotiveWave. MotiveWave and Optima, those are our two most powerful tools. And you'll notice here in MotiveWave, we can very easily track multiple interpretations on the same instrument. There aren't many softwares out there that have both Elliott Wave logic, automation, as well as the ability to track multiple interpretations. Having the ability to quickly track multiple interpretations and share them across your devices, we feel is extremely key for continued success when trading with Elliott. Right now is a fantastic time to pick up the software. If you're interested, you can go to tradinganalysis.com/spring. It's the annual spring sale offering 25% off the lifetime MotiveWave license. And if you go to that website, it ends here, as you can see, in 4 days. You have 4 days and 5 hours from the 25th to take advantage of it. The normal price, $22.95, currently on sale, $1,721. It is a bit of an expensive, it's a high-priced item. But if you're serious about Elliott Wave and really serious about all forms of technical analysis, it is the only way to go. Thanks again for listening and tuning in. We'll keep our eyes on the market. You can follow us at tradinganalysis.com. You can also follow all of us on Twitter. If you enjoyed the video, give it a thumbs up, subscribe with notifications, and we'll see you guys on the next one.